Let's talk a little bit more about this with John Sfakaniakis, who is the chief economist at the Banque Saudi Fransi. You were also with World Bank before, and you wrote a very interesting commentary that got a lot of looks on Bloomberg here this week. What about this question of control and of assets? Where do you think Abu Dhabi could try to assert control and get assets from Dubai if they bail them out?
Well, definitely they will look for the good assets, the assets that create cash flow, generate a cash flow, that there is real money to go after. For sure, as I said before, they're not going to go after the property market. And if they do at some point, they will do it if they want to do it 30 cents to the dollar, 20 cents to the dollar. But they're not going to put good money into bad assets or depreciating assets.
Before we get away from that, Morgan Stanley is saying that all this could take perhaps a 40 to 50% haircut. What do you think?
Well, the real estate market could go further down, for sure. There is still a lot of real estate, a lot of housing, a lot of office space that is waiting to go on the market.
Yeah, so it's already gone down 50%. How much more?
Maybe 30%. That could be the case.
Another 30%?
Yeah.
Okay, and in terms of assets, well, what are we talking about? Because the Dubai government said a couple of days ago, you won't get your hands on any of our assets. That includes Emirates. Do you agree?
Maybe yes, maybe no. I mean, here what Abu Dhabi wants is selective intervention. They're going to go after the utilities. They might go and support those projects that are of significant strategic importance to the UAE, to the Federation, not to Dubai alone. But what Abu Dhabi is going to get out of this, possibly, is that there is less autonomy for Dubai, more unity for the UAE. One foreign policy, not two foreign policies.
Let's take a look at that, for instance, that Dubai has been a bit more friendly to Iran. How do you think that could change?
Well, of course, for Dubai, the relationship with Iran is very historic. A lot of people from Iran live here, more than 350,000 people. Trade links, the strongest trade links between Dubai is with Iran. So definitely, in the 1980s, Dubai was pro-Iran, Abu Dhabi was pro-Iraq. This has to change. The rules of the game will change if bailout happens and Abu Dhabi supports as much as they can Dubai.
Okay, let's talk a little bit more about the assets too. In this restructuring slug out that's going on, we heard that there were some talks yesterday between the creditors and Dubai World. How do you think that's going to shake out? What do you think? What assets there could be obtained by the creditors?
Definitely, we have to look at the foreign assets, right? Of Dubai World, of Dubai Inc., not the government. I think the government has been very careful in distinguishing what can be brought onto the table, which is Dubai Inc. assets abroad, not Dubai government assets abroad. So they could look into certain things. For instance, for me, the question is not what they sell, but when they sell it and at what price they get it, because that's the other question.
To be more specific, then what about like Dubai Ports, for instance? That's a pretty...
I don't think they're going to sell that one because that's making money. It has been doing well. That's the competitive advantage of Dubai. Dubai will continue as an economy, but they can't sell their crown jewel, which is Dubai World, Dubai Ports.
Okay, and then do you think Dubai will lose its status as a center, financial center in the region? Do you think it has the critical mass to remain as such?
I think they have proven to be successful in the financial hub aspect. I think that they will continue to do well. They have critical mass. They have big banks that have established here themselves, so they're doing well there.
John Sfakaniakis, chief economist of Banque Saudi Fransi, thank you very much.